Hi everyone, welcome to our market talk. So finally, we have some emotions in the market. I see that financial Twitter is panicking, even though on a long-term trend we just have a very, very small dip. So we will see if these events in the markets changed our view or not. Uh, Spoiler alert, at least for me, they have not changed anything. So yeah, okay, let's start. So Ted, hi, how are you? How was your vacation and what you see in the market?
It's great. Thanks. Thanks for having me back. I had a great vacation. Took 3 weeks off, which I've never done. Traveled to Italy and did a little bit of bike riding, and then met up with my wife in Spain and went to the Azores, and then managed to get COVID. But other than that, all good. Yeah. So let me share my screen here and just kind of go through my process. Bear with me here. Okay. So. As usual, I'll touch a little bit on macro regime, and from my perspective, it hasn't really changed. Last time I was on, we talked a lot about the transition that I saw in early May that continued to sort of manifest with more of a slowing growth and inflation. Take a little bit of look at policy response, where the Federal Reserve is, then look at my positioning, and then spend a little bit more time on market signals and trades. And there certainly seems like there's a lot going on beneath the surface, and today that manifested with some equity volatility that I'm sure Raphael's going to touch on as well. So my favorite macro forecasting service is defining our current environment as deflation with or Goldilocks with a deflation sort of orientation. I've really looked at this as more of a deflationary environment, growth down, inflation trending down. I've started to observe strength in defensives. We've got dollar breaking down. Whoops, sorry. Dollar breaking down, commodities under pressure. The dispersion trade, talk about that a little bit, appears to be unwinding. We'll see. And then, of course, equity volatility showing signs of life. One of the things I use simple data to help me sort of track where we are in the growth and inflation cycle. And one of the things I've been using is the Atlanta Fed's GDP now. And this thing has been all over the place. The distribution since the beginning of the quarter or middle of April has been as high as 4.5 and as low as 1.5, and settled yesterday at about plus 2.7% for GDP. So it's really all over the place. That was driven by a relatively strong retail sales number and some positive industrial production, particularly inventories, which grew. So we've come off that bottom in late June, and then basically at a plus 2.5 growth rate. We'll see. GDP will be out shortly. This core inflation number came out last Thursday, plus 3.3% year over year. It was the cause of a real move in small caps that we'll talk about a little bit. But inflation continues to trend lower. We have shelter inflation, disinflation sort of kicking in high gear, and most are forecasting that that's going to continue to see softening inflation. Cleveland Fed's projecting for PCE at the end of this month, 2.4 for core for headline, and core at 2.39. That's down about 30 basis points from where they were forecasting a month ago. So we continue to see declines in inflation. And likewise, what we're also seeing is starting to tick up in terms of the unemployment rate. So the unemployment rate, the U3 number at the end, I was reported on the 5th, and that came out at 4.1%. So unemployment, it's low here in the United States, but it's continuing to tick higher. I follow a little bit what's called the SOM rule, and the SOM rule basically says that once the 3-month rate of change of the U3 unemployment rate hits 4.5%, you're basically in a recession. It's not a forecasting tool. It's saying at that point you are in recession. And so we were at 43 basis points with this most recent report, only 7 basis points away from what might be considered a recession. In terms of market participants, we're forecasting a rate cuts starting in September. You heard the Federal Reserve speakers were out all this week, including Chair Powell, talking about how they're getting more comfortable with the rate of change of inflation coming down, and they expect to, they're maintaining. If they stay where they are now, they're going to be maintaining a very tight policy stance. So the idea is they're going to start to ratchet that down. The futures market's calling for 93% chance of 25 basis point reduction. Some are calling for a reduction in this upcoming meeting on 7/31. Don't think that's going to happen. I think Powell would probably have been more. He doesn't like to surprise the market, so I would be surprised if we actually get any sort of a cut. But we went through this before back in December, January timeframe, and of course inflation heated back up again, and you don't ever know what's gonna happen. But at least right now, that's sort of the trend, and trying to position accordingly. Talked about a little bit about what my positioning is. It hasn't changed a ton. I am about as long as I want to be of bonds, a variety of different bond instruments at 28% of my dynamic positioning portfolio. Equities have come down some. In fact, I've got stopped out of some positions, started to get stopped out of some of my equity positions, particularly Qs starting yesterday, which I've been long of for quite a while. Commodities has been fairly steady at around 5%. Some of the alternatives that I use, which would include a steepener that I'll talk about, up to 7%. Currencies, that kind of holds fairly steady in this low teens range, but it's shifted beneath the surface. So I might have been long of dollars for a period of time, and now I'm longer of things like the pound, and also the Aussie, and also the yen, which was a new trade for me last week. I'll talk about that a little bit as well. So in terms of what I'm seeing going on, and I want to just touch on each of these items. What I'm seeing is the dollar rolling over and commodities rolling over in this environment. Breaks of trend from my perspective. I use 3-month price momentum to determine trend. And those things have started to roll on me. I'll go through that a little bit. Gold broke higher the other day, kind of broke out of a trending range. It's come back in, but it appears to want to go higher. I have a core position, and I chased it the other day. I just couldn't help myself, but got a little bit longer of gold. I see the dispersion trade maybe coming unhinged. The dispersion trade, really one that's been manifested with a concentration in large cap tech, in particular the NVIDIA trade. And then beneath the surface, we've had much more dispersion, higher volatility among single names and also sectors. And then I've got a steepener trade I want to just touch on that seems to be gaining some traction. Defensives, which I don't have much of a position in, are starting to catch a bid. And then I've seen, of course, today, equity volatility starting to build. So I'm going to exit this screen and go over to my chart screen and start with the dollar. Let's see here. So this line here is my trend line using 3-month price momentum. Dollar has been broke trend. It was basically hovering around neutral, sold off pretty hard over the past 2 weeks. Of course, we did get a bounce today, but that has kind of opened up some different alternatives for me, particularly when I look at, I got a signal last week. This is FXY, which you might want to think of it as, JPY, USD. I got a buy signal on the weekly, use a Williams percent R from a very oversold level. Very low end of the range, got a nice move in the FXY. It's still bearish trend, but I did take a position in it and in anticipation that it could move higher from here as the dollar continues to break down, and as the Ministry of Finance in Japan continues to try to defend the yen. So that's a new position for me. It's about 150 basis points of capital been allocated. I will, if this thing starts to move higher, I will add to it because it's really low end of the range, and this could be an epic move over a period of time. If not, I'll stop out. It won't be too much harm. I mentioned commodities really starting to break down. This is DBA. DBA is agricultural commodities. This had been a good long trade for me for quite a while. Really started to chop around and has been breaking trend. Likewise, DBB was a good trade for me and has recently broken down. Again, this red line is the trend line, and continued to deteriorate today. If you look at a ticker like copper, you see the same thing happening, and so it really calls into question what's happening from a real economic growth point of view. Likewise with DBC, which is heavily weighted in the oil space. It's got some other commodities in it as well, but I use it as a sort of proxy for oil. And so oil kind of had a nice move, a nice sort of looked like it wanted to break back to neutral trend, and now it's really starting to roll over. So we've got commodity, we've got the dollar weaker, we've got the commodities weaker. It's kind of setting up an interesting setup. So this past week, this gold had a nice move. I've been long gold for quite a while. I've actually had to start hedging my position back in the spring when it started to chop around like this, and so I had a put spread on my GLD position. That came off a couple of weeks ago, and it started to move higher, and then really broke out on good volume on what was that? That was Monday, right? Or Tuesday of this week. I did add to the position. I'm probably underwater now on that new add, but my expectation is that this comes back to this breakout area and we're going to get a move higher. And I don't see any reason with a weak dollar why that wouldn't happen. That said, if it doesn't, I'll stop out. Here's another one. And I know the guys have different views on this. What I'm seeing with Qs, I mentioned that I did get stopped out of, I take a quarter of a position off when my stop is hit. And then if it goes back above my stop, I'll leave it long. Otherwise, I cut 25% of the position each day until I'm out. So this was day 2, cutting my QQQ position, probably right at the point that Raphael wants to add at 477. But what I'm seeing is this is a weekly chart. I'm seeing a developing sell signal on the weekly. My expectation is that this isn't like a definitive sell for the Qs, but I could see this, roll down to 460, 465, and that, get a decent correction before resuming the uptrend. And this is just Qs on the daily chart. And yeah, where did it hit? It went to 476. So Raphael probably got filled around 477. So that's working for him. But that's, if I were be buying again, I'd be buying probably around 470. IWM, I got long because it flipped bullish on me about 2 weeks ago. I got lucky as heck. This is when the CPI number came out last Thursday. This thing just ripped higher. I mean, this was trading, the standard deviation on this was about 5 points for a period of time. It traded between 200 and 210, let's say. And then in 4 days, we just got this ripper higher. And I was lucky enough to have a position in that. Clearly, it's come off today. We've seen the average true range really go up. So volatility is rising as it's rising. Now, whether or not this is just a fake out, I don't know. But my inclination is to add as this thing comes back closer to the range. This really goes to the broadening of the market. So we had Qs really kind of concentrated and SPY really concentrated. And what we've seen is equal weight. Just like IWM, equal weight has started to break out. So we're getting some more participation in the market. That may or may not be a good thing because I see the AAI bulls bears spread went wildly bullish today. So people are seemingly quite bullish at this point in time. But I think this is generally a positive for the market with equal weight breaking out. And then this is just kind of reflects what's happening between growth. This is SPYG, which is large cap growth. And this is SPYV, which is large cap value. Value has underperformed for a long period of time, and then finally we're seeing value start to perform. So what we're seeing is a little bit of a move towards defensive names. So we're seeing that dispersion trade maybe start to unwind, and maybe some broadening in terms of the equity participation. The other thing that I got that I've been long recently, I think this was the week of June 10th, I got long of IVOL, which is interest rate volatility hedge ETF. That is really, it's a tips based trade, but it uses options, and it is a pretty decent ETF to play a steepener trade. It doesn't really matter if it's a bull or a bear steepener. A bull steepener would be short rates coming down as the Fed starts to cut. We've seen the 2-year drop pretty dramatically, so that's been pretty helpful. But we've also seen the 10-year start to drop. If the long end of the curve really steepens, really goes back up, this will start to fail. But it's been a good trade so far. Not a huge position, but one that's starting to work, nearing top end of the range, but one that could have some traction as the Fed starts to cut. So I'm long that. That was the weekly chart. This is the daily chart. You can see this has had a nice base and has broken out, trading really well generally. And then the other thing that I wanted to touch on is the defensives have really started to catch a bid. So I'm just going to rip through a few defensive tickers. This is the high dividend volatility ETF. It's working really well. Did I skip over that one? Let's see. Yeah, no, I didn't. I want to just hit on that too. SPLV, which is low volatility, has been working really well. Staples have been seeming like they want to break out into a new range. XLE, which, who wants to be long real estate? And this thing's just working really well. And then of course XLU has been trying to move higher as well. That's utilities. So these are the trades that are sort of your defensive trades. Yeah, healthcare was doing really well, but got gobsmacked today, so down 2.5%. But again, another defensive area of the market that seems to be gathering some relative strength compared to Qs and compared to SPY. And then finally, we've been in this sort of like tight range with the VIX, somewhere between 15 and 10. We've seen just volatilities, 30 days realized vol, but also implied vols have been relatively low in the 10, 11 range for SPY. And then last couple of days, we got this move higher. And, I'd be interested just to hear what Raphael has to say about this, because, we're really starting to get somewhat of a move here. Looks like it had some selling into the end of the day, but, it's people are buying protection. Traders starting to get a little bit concerned. Does this come back in? Does it break out? TBD. But clearly, and I think Raphael called this a week or so ago. We're saying that he expected to see some pop in the VIX this week. So we had VIXpiration yesterday, and then OPEX, of course, tomorrow. So that could be some of the drivers behind that. So that's my view.
Thank you, Ted. So, Raphael, is it time to load up on puts?
Yeah, I guess that was several days ago. So, okay, I'm gonna go to first RTY. It's good that we had the show about range on Tuesday, Vi, and you said that you would not start a position there because we were at the top of the range. At least we didn't encourage anyone to chase a small cap.
Yeah, that's the correct way of using our tool, and I'm always repeating that because I know that a lot of people, they don't wait. So yeah, sorry, continue.
So yeah, that was actually what you noted during the send us your ticker show that RTY basically had no more upside Actually, we are getting very close to the top of the long-term range. I also got a sell signal actually on that day on RTY. So you cannot see on this screen share, but it's on another script. And even though we are having a sell also on RTY today, it's my overbought signal triggered. So you can imagine just how big people must have been in this long RTY. So then I'm going to go to NQ. So what happened today and yesterday was quite interesting in terms of range. We had 2 consecutive days of NQ hitting the low of the range. So you can see it's in blue here. So we actually broke it bad yesterday, even went to the almost to the low of the long-term range. And today we also tapped this low of the range on NQ. I was actually looking for a retest of trend. So I mentioned QQQ, just yeah, here is NQ, but it's the same. So I had 477 as the first entry for QQQ long, but you can see NQ did the same. It went to my volatility trend level. So I was looking to get long here. I expected some volatility this week. And to be fair, I didn't expect that much volatility. I will talk about the VIX later, but I thought we would go to the low 40s, sorry, 14s, not to the 16 that we saw today. Despite this, my view has not changed because the trend is still bullish. MFR trend is there, so you can see we are quite far away from trend, so no change. We've had a very nice run since moving to bullish trend in the 18,000, and we are still well above that. We are hitting my volatility trend, so for me this is the first starter to take a long. Also, I mentioned that in the show I did about my trade and trend volatility scripts, the way I use it, and on the 2-hour, my bottom trigger for the value of trade, this is a white line here, is 3.9, and it's usually where you get the bottom. So we are very close to it. So you have concomitance of different factors that makes me think that the bottom should happen in the next. I would bet tomorrow, but Monday would be fine for me. So I'm of course looking for NQ to bottom. Let me check this. Yeah, another thing also is the medium Momo and long-term Momo. As far as I can see, they are holding. The short-term Momo is going down on NQ here, but in my opinion, I don't see anything concerning, at least so far. I mean, we've had quite a run, so we should expect some kind of pullback to wipe out the late bulls and get some bears to actually short the market when a bounce should happen. So for now, I remain bullish. I want to hit on Europe now. So in my opinion, Europe has been consolidating for several weeks now. Either you look at the DAX, the CAC, what a beautiful sell-off. Consolidation here, and the FTSE as well. So as you know, I have a long position in CAC. I expected actually CAC to reback up before the middle of July. So far, all I got is consolidation. One thing is concerning, though, for me regarding Europe is the FTSE now is trying to go bearish trend. And usually I've noticed that the UK is a leading indicator for other European markets. So I'm watching this with care. I may have to cut my long CAC position. I also mentioned in the past Nikkei, as I missed this entry here. I was talking about waiting for a retest of trade before taking the long. It ripped back up at the same time as small cap in the US. So I missed the train. But the issue here is first we hit the top of the long-term range on the 10th of July, and volatility is actually climbing back up. It broke trade, it broke trend. So I'm not looking to buy the Nikkei yet until I get at least some buy the dip trigger. So I didn't pull the trigger on the retest of trade. And you have also momentum actually pointing down. So the Nikkei was a good buy there. It was a good sell there. Now it's not a good buy as far as I'm concerned. Now to DXY, which I'm actually thinking is what is driving this move currently. So you have volatility of DXY has been increasing now since the beginning of July, and the issue we are having here is that we keep hitting the low of the range, but momentum is, in my opinion, not moving down. It's still flatlining. I also got a buy signal yesterday on DXY. So my thinking currently is that we may see a short-term bounce on DXY to confirm the bearish trend in which DXY has been. And I think that could be a reason why we are seeing some of the macro positions moving currently. I decided, because of this expectation of DXY bouncing, at least in the short term, to exit my long GLD and all the crypto positions I have. So I'm a little concerned that a move in DXY will create some selling pressure on gold and on the crypto assets. I'm going to go through these assets as well. So for Bitcoin, what I wanted to see when I entered was volatility to go down. The issue is that now it's starting to raise again, and we still don't have trade crossing trend. So now I have no edge. I have, and considering what is happening in DXY, I'm a bit concerned that we could get a sell-off back to maybe the low of the range. So as long as trade is not crossing trend and you have DXY with a potentiality to rise back up, I had no reason to keep this position. Also on MFR, MFR signal a cap to the upside on the Bitcoin. By the way, I forgot to mention this, but IWM and the Russell also had capped to the upside. So I exited the Bitcoin position. Sorry, that's something that's in the middle of the screen. I decided to sell the Bitcoin position and the Ethereum position and anything related to crypto because of this. I'm worried that volatility will climb back up and we may see a deeper sell-off. So of course, I could re-enter, but for now, I prefer to keep my life simple. It's a gold issue. So the gold issue is one, the DXY. So I'm quite worried about a short-term bounce in the dollar. Also, another thing that is happening is that the range is widening. You have the low of the range and the top of the range that are widening currently. This is not something that I want to see. Also, the momentum on short term, long term, medium term are starting to point down. So this is also quite concerning for me. Volatility is still okay. You have trade pointing down below trend. Volatility here is also pointing down. But considering what I said about DXY and what I'm seeing in the Vaimomo indicator, I'm preferring to wait. I'm preferring to get out and see what's going to happen on the, I believe, incoming sell back to the low of the range. Another thing that also I think is confirming my view on gold is increasing volatility on silver. So I was expecting silver to behave the same way gold was behaving in the past 2 weeks, with volatility going down and trade also continuing to go down, but it's not. You have volatility increasing, you have momentum pointing down. So as far as I'm concerned, it's confirming my view that we may see some downside on the precious metal. Now going to yields. So the views we had 2 weeks ago regarding yields was that volatility was increasing and yields were going down. That explained the moves that we had in bonds. So if you bought on the confirmation of trend break on yields, you bought bonds, that was the right play. Now I got some buy signals also in the yields, and I'm starting to see short-term momentum trying to go up, medium-term momentum starting to go up. So I would not be surprised also to see yields at least try to retest trade on a counter trend rally. So that explains another reason why I also unloading the gold position. For me, being long gold, being long bonds is the same reasoning. So if I don't want to, if I'm expecting a bounce in yields, I should expect a sell-off in bonds. I should expect a sell-off in the related assets such as gold. So that was also another reason why I let go of this position. Now I'm going to go to VIX. So for VIX, you know the 3 steps I'm expecting before buying puts, before expecting at least a significant sell-off. The first one is always the same. We have price of VIX breaking above trade and trend. We have trade crossing trend, and then retest of price on trade. So far as I can see, it's just step 1. So I would be very surprised to see continuous volatility, at least continuous move upwards for VIX. Especially we are having VIX breaking the top of the range for 2 straight days. So this is not something that you see every day. So as a bet, you have to consider, okay, it's unusual. The 3 steps that I'm expecting before we have a significant sell-off are not there. We only had the first step. So we have no break of trend. So the logical conclusion is this is a short-term pop in VIX, and at some point this thing is gonna top, and they're gonna take it down back to these levels in the 12 or 11th. The question is when. So I addressed on NQ what I was believing. So either tomorrow or Monday. So this is what I'm thinking for VIX. I think this thing is just a short-term pop, and we're gonna see some downward pressure on VIX very soon. So again, I may be wrong, but that's my current thinking. And yeah, you can see the box I had for VIX, we definitely broke out of it. So, and you have the step 1 that happened for the 3-step program for VIX pop. So yeah, maybe we are entering a new regime regarding VIX, but as far as I'm concerned, it's not yet the time to get in. Yeah, I think I covered everything. That's it, at least for now.
So no puts, sadly.
No puts, and but I bought calls today. Yesterday I bought calls on NVIDIA. I got stopped on Amazon, but I think it's the right play. I should have waited for today on the retest of trend. I think today maybe was a better play to buy. But yeah, I got stopped out on this one. Still holding NVIDIA also.
Okay, so I will be a little bit contrarian on the Japanese side. Wait, okay, let's share my screen. Because I will allow myself to disagree with the statement that Nikkei is not worth trying to buy here. But the reason is there are different reasons. But first of all, when I'm talking about indices, I never look at mathematical formula, let's call it. So cash indices or spot or whatever, I always look at futures. But Nikkei in Osaka, which is very liquid, and actually I believe it's a third mostly traded index futures contract in the world, is actually looks quite good, and not only because it's now flirting with a neutral area, but I think that if we get a dip maybe today or tomorrow of another couple of 100 points, it will be quite a nice spot to buy Nikkei futures just for a bounce trade, of course, with proper risk management and so on. But yeah, I have my magical technical analysis. Horizontal levels is basically the only thing that I tend to draw because of liquidity and sitting limit orders that usually also, yeah. We broke a nice level below 41,000, and no surprise. First of all, Nikkei is really tech heavy, so it correlates quite well with US indices. For example, in Asia, Hang Seng, Hong Kong has almost no correlation at all. It lives its own life. But Nikkei usually, Nikkei continues what US indices does, usually. So anyway, I just want to say that actually I don't think that Nikkei is a very terrible idea. I still need some time to see what's going on, but I think that this can be a really nice buy-in from the volatility perspective. So NKVI, so you can call it Japanese VIX or whatever. I mean, I don't see anything too terrible here. Of course, it's still bearish. We had a pop, no surprise, but nothing. I don't see any warning signs that Japanese market is preparing to collapse or so. I can be wrong. But yeah, anyway, I still have that NVIDIA spread. I was, on Tuesday, people were asking, am I still long or not? But actually, I'm even more bullish on NVIDIA now for a couple of reasons. Yeah, first of all, I was eyeing this level for a while and it held, but it's not that of a reason. But today, even when NQ was falling, well, after yesterday, I will not say collapsing because compared to yesterday, it was nothing. But even when NQ was falling today in the middle of the day and making new lows, NVIDIA was held quite strongly today, and I saw a lot of a positive delta in the order flow, and basically whatever sellers were selling. So whenever sellers were using sell market orders, the limit buyers were just absorbing, and pushing the market up. So I have that spread. I have not added. I think that Raphael, you had it on a nice spot. I don't know what options you were using, but I hope it's not OTM lottery ticket. But at least if it's because I know that Raphael is buying lottery tickets, and I want to. I know that, so I never buy options when we are calling like Raphael is buying like 10 delta, 20 delta. I mean, but to each his own. Anyway, but I hope you bought the right options. But I think it's a nice trade. Yeah. So my spread is still from risk management perspective. Usually I have this rule that I close the spread if its value drops 50% from what I paid for it. Usually it's, let's call it a stop loss. So I mean it was not there, and yeah, it's still August expiration spread. I'm still holding, and I think that Nvidia is nice. Now, who noticed the Hearst exponent on XLU and financials? Good job. I hope our users are watching Hearst exponent, because this one is very valuable piece of information. And we saw, and Ted was talking about, and actually Ted nailed it, I believe, months ago. But now we see this beautiful rotation from tech to defensives. Especially yesterday, it was very strong. You could see from which sectors were up, which sectors were down, and actually Dow Jones Industrial Average futures closed at the highs yesterday, even though NQ crossed. But yeah, we see this nice rotation. But now I want to show XLU and XLF, which is these are beautiful charts. So actually, I'm quite bullish on XLU here, and I think that we will continue upwards, and I expect us to test highs, or maybe to make new highs just because of that. So I know some call options there. I just want to see what the market will do maybe tomorrow, because I agree with Raphael that we are very close to the end of so-called sell-off. So we will see if Raphael is right, which I think he is. I will be eyeing actually not only tech, because now it may seem like I'm talking nonsense because NQ and so on, but I think that if overall equity market will continue to rally, we will also see now a different stage of that rally. It means I expect other sectors to catch up and go up more, even though if tech will go back to the highs, I expect things like XLU to go to the highs as well. Yeah, so from my perspective, nothing changed. I'm bullish. I see no reasons to be bearish. These days, and actually last week and this week, were a good lesson for people why risk management is important, because I saw a lot on financial Twitter where people were experiencing big losses, and then I just have no idea what position sizes a person needs to use for this small sell-off to cause big losses. But anyway, manage your risk. I'm bullish. I think that we will get move up next week. But also, yeah, one thing to note from signal perspective is that I expect other sectors to catch up as well, and this rotation can be a nice start. But yeah, don't get me wrong, I definitely don't expect NQ or AI things or tech stocks in general to enter bear market or whatever. Yeah, so that's it from me. I have no other positions, only that NVIDIA spread. I'm day trading futures for now, and I'm waiting to initiate some positions. Not only calls in sectors like XLU or so, but after this dip, actually, I'm eyeing nice iron condors on Spire QQQ, and in this season of our market talk, I was not talking about iron condors in the past. I was saying, oh, I was saying how I love that. Yeah, but that was a reason because you want to initiate iron condors on a pullbacks and then volatility is going up. So, and actually now we had a pullback and the volatility is going up. So maybe if everything goes as expected, maybe during the next market talk, you will find out that I have some iron condors, but we'll see. Yeah, so that's it from me.
Yeah, I want to show actually what MFR looks like currently because it's pretty insane in terms of risk reward. So
Oh yeah.
I don't know if you see, I have filtered by upside downside. So this is upside downside ratio. So basically, you compare the downside potential with the upside potential, and this is a long-term upside downside as well. So you can see it's getting very, very, very interesting. And on the opposite side, what are the lower upside downside ratios? Volatility. So actually dollar, so MFR disagrees with me, but we will see. But yeah, volatility. So of course, this is what you would expect after a sell-off. But today was not a crazy sell-off yet. You have big upside downside ratio. And another thing, and then we can go to Qs. People are talking about seasonality. They are saying, yeah, it's second middle of July, you know, this is when the sell-off happens. But the thing is, I checked last July and QQQ. Sorry, I wanted to show QQQ. And the volatility didn't look the same at all. So you had slow build of momentum in volatility. So this was actually, let's say, really a good phase transition in terms of vol, you know, higher low, higher high, slow upward move. But what we had today was, sorry, for the past 2 days was really a rip in vol. For me, this is really temporary. So again, could be wrong, but as far as I can see, it's just a rip of vol. Probably because of what you guys said. People are just switching positions for whatever reason, and you just have an unwind that is causing this spike in vol. So yeah, that was just
yeah, and as I said 2 weeks ago, also when I was showing the mean Keltner channels and so on, that basically market needs energy to continue, and when the price goes too far from the mean, whatever you use to measure that mean doesn't matter. VWAPs with deviation bands, Keltner channels, doesn't matter. But when the market goes too far from the mean, it's normal for the market to shake things up a little bit just to correct a little to attract new energy to continue the move. That's why it's actually what happened. And now also I wanted to add to your seasonality thing. You can open monthly or weekly charts of anything like QQQ, Spire, whatever, and just for yourself test when was the last time when this quote unquote sell in May and go away worked. I can tell you that it was very, very long time ago. So yeah, just that, you know, and people and analysts and people who want to, you know, appear smart, they always talk about the reasons why things should reverse, because, you know, one time out of 100 they will be right and then they will buy themselves a medal. So yeah, but yeah, so for now, what's the best and what everyone should do is follow the process, whatever process you have. Don't question that, and market is bullish and it will be bullish until it doesn't. But now is not the time for it. It's still bullish. So that's it.
We have a question from Ragav. It's actually,
Yeah.
can you explain? So it's a It's a bit long question, but can you explain what fractal means in terms of calculation? So he's talking about yeah, trend and range.
I saw the question. Yeah. So I will just short version of the question is, can you explain what a fractal means in my fractal range process and tools? So I will repeat what I said a lot of times. It's very easy. I will explain it in a very easy way. Fractal basically means that we at my fractal range are looking into what's going on a lot of different time frames, and I actually will even take it more further, not a lot of, but basically all time frames you can think of. It's the same for Hurst, for ranges, because well, what I mean is when we calculate, for example, regular term range, of course, it has a ceiling. Let's say it's a month, but for us to calculate the range, we are looking into what's going on using month of data. Then you can think of, I mean, 30 days, 29, 28, 27, back to 1 day, and even deeper into intraday. And then you combine everything together. So basically, it's just multi-time frame analysis, because the idea of fractal math is that same things are happening in any time frame you can imagine, and it's not only related to markets, but yeah. So we look into all possible time frames, from large ones to very small ones, to come up with a model which gives you a risk profile, which is the range, and the Hurst exponent, which is the long-term memory in the asset time series. So yeah. So the quick answer, fractal is multi-time frame. You can think of it, but it's not just like multi-time frame. So like daily, weekly, monthly, or 10, 30, 90. No, it's not. It means that you take some period and then you dig what's going on in every time frame that fits into that period. Like I said, 30, 29, 28, 27, back to 1 day, then 4 hours, hour, whatever. Yeah. I hope it answers, because I saw that question and I hope it answers that. Fractal is just multi-time frame analysis.
Okay. So if anyone has a question, you can send it in the chat. We will reply to it. But yeah, Raghav was the only question we got prior to the show. Yeah, nothing. I send a message also in the chat to ask. That's it. Okay, so I think we were good.
Yeah. I think that interesting week, that we have interesting week ahead. So next week will be very interesting. Of course, now we know what we all expect, but it will be nice to see what happens, because at least I expect interesting things on a bullish side. But yeah, actually, in this volatility, it can be even on a bullish side, but in the middle of that week, even though it can go both ways. So we will see. Very interesting. Yeah. So if we don't have any questions, so then thanks everyone. I hope it was useful. As always, if you want us to talk about something specific, if you have any questions, let us know, because remember that we are doing this show not for us, but to be valuable for everyone watching. And yeah, so thanks, Raphael. Thanks, Ted. Thanks, everyone. See you in 2 weeks. Bye.
Thank you, guys.
Thank you.
Bye-bye.
Bye now.